My beautiful friends, I'm trying not to laugh. That's the truth. It is Wednesday, June 26th, 2019, and yes, we have to talk. So why am I so giddy this morning? Well, let's start off with the basics. As I am doing this video blog, stocks are higher across the board. Nothing dramatic, higher nonetheless. But the joke, which is on us, is this. And I want to read this to you. So again, keep in mind, stocks are higher across the board. We got two pieces of absolutely abysmal, falling off the cliff economic news, and this is helping to spark the rally on Wall Street. Number one, durable goods orders drop 1.3% in May. Orders for U.S. durable goods fell in May for the third time in 4 months. That's one. And number two, the U.S. trade deficit widens 5.1% to $74.5 billion in May. Now, again, let's keep this in mind. Terrible economic news. But stocks are higher. Well, why would that be? Well, it means the Fed has to act, and the market knows it. The market loves it. Like I've explained to you since forever, the disconnect between the economy and the stock market is going to continue to get wider. The middle class is going to continue to be decimated. Now, the other reason why stocks are higher, I covered this yesterday in my special report video that I did late last night. Crude oil is higher by 2%. On a few things. Number one, Iran has cut off diplomatic ties to the United States, and there was a drone that was shot down by Saudi Arabia. Middle Eastern turmoil pushes crude higher. I explained to you last night that pushes the energy sector higher, pushes the financial sector higher, stocks go up. And then you had Treasury Secretary Mnuchin talking about the China deal again. I mean, they can't stop the narrative. It's unbelievable. But this is where we're at. And that's why I almost was... In fact, I was laughing. Prior to doing this video, I was literally laughing. You have to sit back and laugh at this. You can't make it up if you sat there and tried. It's an absolute impossibility. So let's see what happens here with regard to this market. With regard to... you know what? Let's have a look at the debt market while I got you here. Are we having any fun in the debt market? Let's see. Oh yeah, 10-year yield still about 2, 30-year coming down. Oh, that's awesome. It's awesome. That's because everything is so great. You know that. I know you know that. All right. So in summary, yet again, and it doesn't stop. It just doesn't stop, and it doesn't freaking stop. Bad economic news, U.S. economy is in free fall, but that does not mean that stocks are not going to go higher. Like I've been saying, don't short this market. Me personally, I might short this market for like 5 minutes today if I find a spot, because I've been day trading lately and I've been doing very well. But don't short this market long term, regardless of what's coming down the pike. The Fed will be cutting rates in July. I still believe 50 basis points is the most likely scenario. 25 isn't going to do anything. In fact, I think 25 basis points cut to the federal funds rate would actually send the market lower, because the market is hoping for a bigger cut. And again, there's not hopium. Hopium is what's driving this market. Bad economic news is what's driving stocks higher. The deliberate propping up of crude oil is keeping stocks elevated as well. You understand how this mechanism works. It's twisted. All right, with that said, I'm going to let you all go, and we will talk later. No doubt about it.